Welcome, dear traders. You are watching a recap of the Asian session on May 11. Yesterday, US statistics showed that inflation fell below 5% for the first time in 2 years. As a result, this data supported the growth of stocks. However, Wall Street's positive sentiment did not boost market indicators in the Asia-Pacific markets. On Thursday, the Asian session started with a drop in stock indexes. Let's discuss the main highlights of the Asian trade. Plunging inflation in the United States implies more than just a pause in the US regulators' hawkish setup. According to the CMS FEDWATCH tool, there is a 90% chance that the Fed may refrain from rate hikes at its next meeting in June. The slowdown in price growth, as well as the decline in the number of jobs, may be linked to the US drifting into recession. In the wake of Janet Yellen's warnings today, these fears have intensified. The Secretary of the US Treasury stressed that a default would threaten the gains that we have worked so hard to make over the past few years in our pandemic recovery, and it would spark a global downturn that would set us back much further. To avoid an economic meltdown, the US Congress has to raise the national debt ceiling. However, the existing disagreement between the US President and the parliamentary majority hinders such a decision. Both sides have so far refused to compromise. Negotiations and haggling will continue tomorrow. Meanwhile, the producer price index will be released in the United States, and this indicator, along with the yesterday's CPI and non-farm payrolls, can push the US dollar down to 101.20, following yesterday's pattern. However, at the beginning of Thursday, the US currency strengthened and the index climbed to 101.80. Perhaps the dollar's position against its G6 counterpart, especially the British pound, which accounts for almost 12% of the basket, explains the greenback's growth. According to forecasts, the Bank of England may raise its key interest rate for the 12th time today. However, the British currency has already priced in its potential growth on this rally. The US dollar took advantage of this during today's Asian session and strengthened in the range of 101.30 and 101.90. Settling above the May 9th weekly high of 108.80, 101.80, the greenback may test the monthly high of 102.80. If the US currency declines, it's likely to test the support level of 101 points. The Japanese yen, the US dollar's counterpart in the G6 basket, traded calmly this morning. The dollar-yen pair fixed in the range of 133.80 and 134.5, showing weak signs of growth. In addition, the markets digested the statements made by the Bank of Japan's governor today. Katsuo reiterated that there is no big problem in Japan's banking system. According to the Bank of Japan governor, US regulators are successfully curbing the banking crisis in the country. In other words, everything is still the same in Japan and everything is under control in the United States. However, the Japanese yen was affected by this situation. By the end of the Asian session, the yen rose to 134.5 against the greenback. It seems that the trend is likely to continue. Despite the risks of a recession, the global economy looks quite beyond, and inflation has fallen in most of the G7 countries. However, traders in the Asia-Pacific region are concerned about the weak recovery in China, the largest economy in the Asian markets. Consumer inflation in China fell to its lowest level in 2 years in April. Fresh data showed today, and the indicator decreased to 0.1% year-on-year amid an uneven economic recovery following the lifting of restrictive measures. Producer prices continued to deflate in the same period. In April, they fell to 3.6% year-on-year. The weakening and deceleration of commodity prices was the main reason for this. This means that China continues to deflate for the seventh month running. On the other hand, this data may force China's central bank to stimulate the country's economy. China's weakening market signals interest rate cuts for the antipodean currencies and stock markets. While domestic demand in China looks sluggish, Treasurer of Australia Jim Chalmers announced that he intended to improve and stabilize trade relations with China. The Australian currency, which becomes sensitive to events in the United States and Europe, did not receive support from the Treasurer's comments. During the Asian session, the Aussie fell and traded within the range of 0.6722 and 0.6797. After breakout of the key level of 0.6800, the AUD USD pair is retreating amid optimistic expectations for Australian consumer inflation. However, the pair may show wider fluctuations after the release of the US inflation data. The Aussie by the end of Asian trade consolidated at 0.6735. All of these external factors led to the decline of the New Zealand currency. As a result, the Kiwi almost fell to 0.6330 against the US dollar. In the Asian session, the New Zealand currency edged down in the range of 0.6330 and 0.6386. Although it could go much lower today if not growth in the New Zealand. According to today's report, the country's food prices jumped to a record 12.5% year on year. This means that the country's central bank will have to raise interest rates at its meeting on May 23, and this prospect seems to have supported the New Zealand dollar, preventing it from a deeper fall. And that's all for now. Subscribe to the channel and keep close tabs on the latest market news with us. See you soon.